Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Wednesday, April 11th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to build out in this very narrow range here. We're compressing rather significantly at the moment as highs are getting a little lower here, lows are getting a little higher. We clearly have a very tightly compressed pattern, and this pattern can break in either direction. The most likely here may be to the upside, back up the range. But again, we've yet to see the ES really establish acceptance above that 69 quarter, which has been our major key level. And again, that's the FOMC key level from December 13th. And we also have the 2703. I mean, that's a major zone there that has continued to hold as resistance. So again, it would take a major stop run day to get through that area. But if price starts to break through 70, that could easily start to get you back to 2703, 2730 very quickly, perhaps in one day. If there's any failure, say it tries to push up here and starts to reject, that rejection could then lead to a lower low test of the recent support. So again, this has not been an easy environment here. There's been lots of back and forth. It's been great on an intraday basis for day trading. Much better than we'd seen before. The daily ranges are just much bigger than anything we've seen in the last several years, and so it's really good for day trading. But again, you have to be very careful here on a swing basis because there's been lots of back and forth, so you have to be very cautious. So right now, still watching 69 quarter. Above that level, a stop run day could be rather significant. 60 points up to 2730. Any failure to break through here could lead to a lower low test. All right, let's take a look at the NQ. NQ, very similar behavior. Again, that 66.53 has been very important. That is the midpoint of the key range. Remember, that key range gave us the levels to watch here, and these levels were likely to remain intact over the next several months, perhaps 4-6 months down the road. And that's exactly what's happened here. I mean, here we are 3 months down the road. We're still in the range and no signs of breaking out of it just yet. Again, if price were to push through 66.53, it could be a stop run day that leads you much higher very quickly, say to 68.50, and then perhaps all the way back towards 69.17 in a very short order. That's the FOMC key level. Remember, you take it offered, you're going to keep going down until you see rejection, at which point you usually snap right back to that level. It even happened over here. It took it offered, rejected here, and then came all the way back to that level. So there's definitely the potential to see a move at least to 69.17, but that's going to take quite the breakout to get above the zone. Any rejection here, again, very similar to ES, could lead to a lower low test, and again, that could be defended. All right, let's take a look here at gold. Gold here has pushed a little bit higher here, and it continues to hold within this key range. At some point here, we're going to see expansion. Again, we've been building out in this area for some time, many months now, and we haven't seen expansion out of this range. So at some point here very soon, we could begin to see that expansion. If it's going to be to the upside, that would be rather significant because we have 1375 as the major long-term, talking 5-year CLVN. That's the composite low volume node. And again, that would be very significant if we were to push through that area, because it would open up much more upside that we haven't seen in years. Otherwise, any failure or rejection to push through 1375 could lead to a major failure and a reverse across this range. So again, we have this range to watch. There hasn't really been a whole lot to do in this range right now unless we get to the edges. So we're still being patient here. Right now, the flow is to the upside, which suggests that we could be reaching the 1360 to 65 zone here fairly soon over the next couple of days. All right, let's take a look at crude oil. Here's crude. Now, this is significant here. Last week, we had this reaction here. Very nice rejection. I mentioned at the time that was a great opportunity to buy this thing and return it back up towards 66.07 and also 66.29. We were watching 62.80 right here, 62.85, 62.80 for a defense and a buy opportunity, and instead price went offered, so there was no trade. And instead we got the minor lower low rejection here, and then price launched higher and pushed higher. So this was a deep shakeout leg after this rejection here. That shakeout leg then led to a major move right back up. And again, this move right here is very, very suggestive of how the energy market is viewing the situation happening across the globe, especially in Syria. You know, this could be something that exacerbates heading into the weekend. We could gap up and start running Sunday night, depending upon what happens this weekend with regards to that conflict. So again, we are right now at the edge of an ascending wedge, and what I've mentioned before is this pattern suggests that we will break to the upside at some point. That pattern right here, been coiling up for several months now, and if we do get a breakout, it would be a big quick move to 70.41 and then a shot to see 74.52 over the next couple of weeks, perhaps even quicker than that. So I mean, that would be a very, very easy target to reach to, 74.50 based on this range, and you may even see more than that because this range has been developing for many months. This move could be just a couple, it could be a week or 2 weeks just to get there, followed by an additional, month or two of strength. So it could be rather bullish to come out of this range. Again, there has been no breakout just yet. We could easily, start to reject and fade back down and continue to develop before we do this. But again, be cautious here. In crude, we are at resistance. But anytime you're at resistance here, there's always, it's a decision point. It's either going to try to push higher and fail, in which case it would rotate back down to 62s, or it's going to try and break out, in which case it's going to start running towards 70. So we're at a decision point, very clear resistance level right now for crude. Here is a look really quickly at ZB. I'm going to drop Bitcoin right now. It's very, very quiet, almost embarrassing how quiet the volatility has been in Bitcoin compared to last year. I haven't talked really about ZB here in a while, and what we've been looking at in the trading room is the rounded bottom that's been developing in ZB. For the first time in quite a while, this behavior suggests strength ahead. And when we first really started watching this one was right in here when price was pulling back and starting to round off, and that was an idea that we could start heading higher. The next pullback has also been defended modestly here, and again, if price can start pushing above 147, this behavior opens up a move at least to 150, which is prior support, but has the potential to push price back toward value, which is 153.27. Now I know that's a long shot right now because of the overall bearish sentiment we've had in ZB for a while. I mean, this has been just many months of just very bearish behavior. I mean, this has not been anything to write home about ever since July of 2016. I mean, it's been super bearish. So it's been I'm cautiously optimistic on this one. I think that this rounded bottom, if price can continue to hold above that 144, we got a shot to go much higher. But again, this one has not shown any potential to push higher in quite a while, so I'm cautiously watching this one as it continues to develop that rounded bottom. All right, everyone, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you soon.